It's time, though, now for Smart Charts with Abigail Doolittle, where we're looking at some of the timely topics through the charts of the street's top technicians. Abigail, you're starting with the S&P.
You are right about that, Caroline. And joining me to talk about the S&P 500 is Walter Zimmerman of ICAP Technical Analysis. Thank you so much for joining us. And you have a pretty dramatic chart that matches up to an S&P 500 chart that we've been looking at over, let's call it the last, few months or so. And the Fed, perhaps, some are calling it less dovish, others are even calling it slightly hawkish, may actually be an impetus for this chart to work. Although I must say the S&P 500 itself is still confirmed to go slightly higher.
Yes. First of all, the OEX tends to have much more...
And that's the S&P 100.
And this S&P 100, or the OEX. And it tends to have, on average, much more precise chart patterns. And this one is no exception. Each of these turns from here to here, textbook perfect, and now we're extremely close to this pivotal resistance line. Actually, if you raise this line a tad, this goes up a little bit, and you're talking about pivotal resistance 1350 to 1370, and if that level cannot be decisively broken, the downside risk is basically 950 to 930. And the question is this whole thing a bull market correction or something much worse? The case for a bull market correction is an expanding triangle, A, B, C, D, E, but only from the 950 area will a longer-term uptrend resume.
So again, to connect this to the S&P 500, which more of our viewers probably are familiar with, so the S&P 500 is confirmed for a little bit higher, 3060 or so, and then to the downside it would be 2200. But the question that I have for you around this this pattern, Walter, it's pretty interesting because it's a broadening formation from a classic textbook technical analysis standpoint. It's supposed to break to the downside 9 out of 10 times, but since the Fed's accommodation, they break to the upside. So with those percentages, so what do you? We could actually see this break to the upside.
The problem is this broke to the upside against this, but it was a bull trap.
Yes, but in the case of, if you look at some of the other ones going back over the last couple of years, unlike the big one in 2007, 2008, and 2000, they have actually produced the move to the upside. So could you see that happening here?
I don't think so, because the bull case, well, if it can take out 1370, maybe. But I don't think it's got a chance of doing that. And like you said, it's a broadening pattern. And in classical chart pattern analysis, it's a broadening top, 1, 2, 3, 4, 5, and then it breaks below this line.
And then the measured move down.
Then you've got a big mess.
Yes, you have a big mess. Well, we'll see if this one works, because it's kind of been interesting over the last decade that these patterns really have not worked as they're supposed to. But speaking of bearish, let's take a look at your chart of the pound, but not to the dollar. You're looking at euro pound.
Yes. And this,
another big range here.
Yes, and this is, again, textbook perfect pattern. From here to here, 2.618, A equals C. Perfect. From here to here, A equals C, and the 7862 of the move up from here to here. So if you take this as a big A leg, this is a big B wave, your 618, A equals C, 93.10. What was the high tick? 93.10. But that was 2 years ago. And where's your sell-off? You have this stunted, abbreviated, puny, lame excuse for a retreat, which suggests all this has been a bull market correction. And so if this is A and this is B, your A equals C is 108.40.
Well, Peter Borish of the Quad Group, he joined us the other day, and he was also bearish on the pound. And I know that technically you're not supposed to want to talk about the fundamentals or the what, but if you had to, what would you connect this to? Just a messy Brexit?
What I would connect this to is I think this chart speaks a little bit truth to power. Power being certain politicians saying that, oh, a no-deal Brexit will be fine, we'll get through it. But this suggests no.
A no-deal Brexit's going to be a total mess. Wipe out.
And if you start all the way back here, A, B, A equals C is 107.70. So you're really talking 108 pounds per euro. And now it's 92. That's a huge move.
That is a huge move.
It's not bullish.